Russia slides into an historic debt default as payment period expires. Yes, Russia has officially defaulted, and this could potentially be a very bullish thing for the markets. Now, JP Morgan's Marko Kolanovic expects a 7% rally this week due to portfolio rebalancing. And now, if this one situation comes to fruition, we could be in for the lows of the year, or potentially we could slide to newer lows if July 28th comes around and we go into a technical recession at the same time the Fed is still raising interest rates. So there is definitely a bullish case here. There's definitely a bearish case here. We're going to talk about what to expect here in after hours because we also have Nike earnings, and that is going to be key to get a glimpse into the state of the consumer as well as how much inflation is Nike dealing with. So without any further ado, your time is valuable just like mine. Do me a quick favor and hit that like button, subscribe to the channel if you guys are new here. I appreciate every single one of you guys for tuning in every single day, and let's make this money, baby. So diving straight into it, Russia slides into historic debt default as payment period expires. The key points: interest payments totaling $100 million were due on May 27th and subject to grace periods, which expired on Sunday night. Sweeping sanctions imposed by Western powers in response to Russia's invasion of Ukraine, along with countermeasures from Moscow, have effectively orchestrated the country from the ostracized the country from the global financial system. My apologies there. And that's really what is going on here, right? Russia, they can print all the rubles they want. If they don't want to get US dollars, if their ruble is becoming less valuable and it costs a lot more rubles to exchange that into dollars, for many reasons, Russia is defaulting. Obviously, their economy is in the toilets. And I know you guys are probably wondering, how could this be a bullish thing? Well, it comes down to the war actually ending, because if you cannot finance a war, you cannot fight a war. As simple as that. And a fun fact, that is why Russia sold America Alaska for about $7.2 million at the time, worth about $110 million here today. Widely known as the best real estate transaction of all time. Alaska was a steal of a deal for $7.2 million back in the 1850s, and it was because Russia was losing the Crimean War and they were bankrupt, thus ending that war effectively because of financial issues. So that is something that could play out here again, and it would not surprise me to see Russia declaring victory and essentially ending this war sooner rather than not. This would be an ultra bullish thing because the war in Ukraine that obviously Russia started is affecting the price of oil in a major way, affecting the price of food in a major way, and that is affecting inflation in a major way. If the war in Ukraine ended tonight, the price of oil would go down per barrel 10 to 20% tomorrow. The price of food would immediately be affected as well. That would drive down inflation and potentially take a lot of the burden off the Fed, and the Fed wouldn't have to raise rates nearly as aggressively. And that is why that is the single most bullish catalyst we could get, and that is something we need for the Fed to stop raising rates. The Fed's not going to have an excuse to stop raising rates until CPI does come down, recession or not. So that's the bullish case. The bearish case is, well, July 28th, we could go into a technical recession at the same time where the Fed is going to raise rates July 27th, the day before July 28th. So you could have a lot of fear towards the end of July, and that is something to keep in mind. But over the next couple of weeks, it's really going to be dominated by company earnings that start to come out, including Nike here in after hours, as well as any inflation data that we do get, or any bad consumer data as well, will be very, very important for the markets, and that is what is going to cause the biggest days of movement in the market. It's going to come down to those data points. So I do think the Dow, the S&P, and the NASDAQ are slightly red today because of the anticipation of Nike earnings. The whole entire market is going to be paying attention to those. The NASDAQ down 0.64% here at the time of recording this video. S&P down 0.26%, and the Dow Jones Industrial Average down 0.18%. Russell 2000 is up a little bit over 0.5%, which is very interesting. And another fun fact, the Russell 2000, 1000, and 3000 have never been this undervalued on a PE ratio ever in history. So it does look like there is a bargain buy in these small caps. Now let's talk about what to expect beyond that for tomorrow and the rest of this week. If you are unfamiliar, it's not going to be anything too crazy for tomorrow. You do have S&P Case-Shiller Home Price Index year over year. That's important for real estate. Not really going to move the needle as far as the stock market. And then you do have the final numbers for Q1 GDP, PCE prices, consumer spending. That comes out on Wednesday. Not expected to be anything too crazy as well. But on Thursday, that's where you do get personal income month over month, personal spending month over month, initial jobless claims, core PCE price index month over month, year over year. And that's going to be the first day where you get some economic data that could really move the markets a lot. And that is on Thursday. On Friday, you have ISM manufacturing data as well. But I do think with portfolio rebalancing, and essentially the way it works is hedge funds look at their portfolio and they say, hey, what are we short on? What are we long on? Where does the valuation currently sit? Where does the overall trend sit? You know, should we be short on this stock anymore? Should we start to buy this stock? And I think for a vast majority of the markets, they're in firm buying territory. And that is why Marko Kolanovic expected a 7% rally for this week because of how beaten down these stocks are throughout the last 3 months, taking a vast majority of the pain. The S&P is down 14% in Q2. In Q1, it was only down 4%. So you've taken a massive beating. A lot of stocks have overshot to the downside. And I think there is a reasonable case here that portfolio rebalancing could be very, very bullish. But obviously, it does not always have to work that way. The short interest in the S&P 500 is still very, very high. If we go ahead and pull up the SPY over here on the Ortex data, you guys will see that the short interest is sitting at record high levels that we have seen throughout 2022. It is very, very high. Short interest of free float sitting at 18.4%. 7 days ago, it was at 19.37%. This is categorized as extreme short interest. And the sentiment day, as far as June 15th, the short interest of free float was at 19.98%. So that is the highest level by far that we have been at in 2022. And throughout recent history, you have not been that short in a very long time. You really have to go back to the COVID crash of 2020. And then beyond that, you really got to go back to 2008, 2009 to get short interest on the S&P of these levels. At the same time, on the S&P, you are seeing a cost bar max of 4.72%. So that means when you lend out stock, that is the interest rate that you would get paid. And that is what the person who is taking out those shares would have to essentially pay. The higher the cost to borrow max and minimum are, the bigger potential move that you could see in the short term. Cost bar minimum of 0.49%, cost bar max, like I said, at 4.72%. So that is pretty much going to be all for this video. That is what you guys need to know. Nothing else really that is affecting the markets, but the markets are paying attention to and waiting for Nike earnings here in after hours. That's going to be the next biggest important thing. If Nike earnings are good, well, you're going to have a very substantial green day tomorrow. If they are bad, like really bad, you could get a severely red day as well in the markets tomorrow. So that is going to be all for this video. Hit that like button, subscribe to the channel if you guys found value out of the video. Thank you for tuning in, and I will see you in the next one.